Muted.
All right, good afternoon, everybody, or good morning if you're on the West Coast. I'm Liz Keener, Managing Editor of Powersports Business Magazine. Welcome to our 4th annual State of the Industry webinar, which serves as a supplement to the annual Market Data Book, which subscribers received in the mail earlier this fall. Powersports Business and our sponsor, MB Financial, are bringing you this webinar to share recent data on the industry as a whole, at the dealership level, and in the pre-owned space. Today's speakers represent some of the market data leaders in the industry, and they're all annual contributors to the Powersports Business Market Data Book. We are joined today by Tim Buche, President and CEO of Motorcycle Industry Council, Noel Lais, VP of Operations at Spader Business Management, Robert Grant, Business Development Engineer at CDK Global Recreation, and Jim Woodruff, Chief Operating Officer of National Powersport Auctions. I can attest to the fact that they all 4 have data that's going to help you plan for 2016. Of course, this webinar would not be possible without the help of MB Financial. MB Financial has been working with powersports dealers for more than a decade, offering indirect lending services. MB Financial has also been supporting the State of the Industry webinar for each of its 4 years, ensuring you're getting the most recent data to help your business. To welcome you today, we have Brian Weaver of MB Financial.
Good afternoon and welcome to the 2015 Powersports Business State of the Industry webinar sponsored by MB Financial Bank. My name is Brian Weaver. I am MB's sales representative for the state of California, and we are honored to be part of this event. MB Financial Bank is a Chicago-based commercial bank with more than a 100-year history of building deep, lasting relationships. We offer a full range of powerful financial and the expertise and experience of bankers who are focused on our client success. Indirect lending program has been servicing motorcycle and power sports dealers for the past 15 years. We are currently partnered with over 800 dealerships nationwide. Besides superior service and competitive rates, we also allow dealers the opportunity to earn true participation through dealer markup, along with adding unlimited back-end products and services right onto our approved amount. A special thank you to our speakers and Liz Keener from Powersports Business for organizing today's webinar. On behalf of MB Financial Bank, thank you for being part of today's State of the Industry webinar and look forward to the opportunity of working with you in the future. Liz?
Thanks, Brian. Before we get started, I just want to let you guys know that there is a chat function at the bottom of your webinar dashboard. You can use that to ask questions throughout the webinar. If you ask pertinent questions as we go along, I'll try to ask them to the speakers. Otherwise, we will hopefully have some Q&A at the end of the event. Without further ado, let's get started. Our first speaker is Tim Buche, President and CEO of the Motorcycle Industry Council.
Well, hello, everyone. It's a pleasure to meet with you. When I accepted this opportunity, and I'm really appreciative of the invite, I had a board meeting that was going to be more conducive to my time. MIC moved their meeting to today to accommodate some schedules, and so I'll be opting out after I finish here, and I apologize, but certainly I think people know how to get a hold of MIC, and we'd be happy to help you with any follow-ups that come up after the fact. What I'd like to do is just move ahead, and Liz, do I have control here? It looks like. There we go. Okay, I am not changing the slide here. Apologize.
Right,
can you, if you can do so for me, that would be fine. Let me just first quickly talk about the industry economic impact. In 2013, and we'll have new data soon, you can see it there, we were an industry on the motorcycle side of $22.5 billion. 6.5 billion, or about 29% of that, is of new vehicle acquisitions, and that shows on a build out of this slide, the $6.5 billion. If we look at the next slide, this means something at the state level. Certainly we're excited to have dealers as members now. And if you're a retailer and you want to make an impact on the government relations side in your state, we're happy to prepare these for your use, and we encourage you to go in and see your state legislative offices, whether that's at the state level or your federal representatives or senators, that as the case might be. But certainly making your voice known, and you can see from an example here what that looks like, the impact that we have at the state level. You're a voice, you're Main Street as a retailer or dealer, and that's a voice that government needs to listen to. And frankly, we do our work in DC and in some of the states. I'm going to say you're a stronger voice than we are. We're paid to speak. You've got your life invested in your business, and the stake that you have is significant, so take advantage of that, please. The next slide looks at estimated motorcycles in use. And one of the things we really look at, I hope that you look at it this way, when you gain by putting a motorcycle, and most of my talk this morning is on motorcycle, but you can imagine ATVs in a similar vein. When you add a new power sports vehicle to a house on a cul-de-sac or down a lane or in an apartment building, you're adding an advocate for motorcycling and somebody that's going to share what they're loving about what you offer and the experiences you sell. And so we're excited to see when we've got motorcycles in 6.94% of the U.S. households. That's significant. That translates to about 10.5 million motorcycles owned. Motorcycles in use, that's about 10.1 million. So there's about 400,000 vehicles that are not in use at the present time. You might be able to sell them some parts, service, and get those things back in use. When we look at the next slide, the motorcycle population, that 10.1 million, about 90% of those are used on highway. About 61% are 750 cc and larger, and about 1.23 motorcycles per motorcycle owning household. That's down a good bit from about 1.5 not too many years ago, and that's in part evidence of new buyers who are buying their first motorcycle. They're not quite ready for their second. We're also seeing people trade more frequently, and there's a healthy used market, and others are going to talk about that soon. One of the things we love to see, more owning households, more motorcycles per household, and that might be because of another rider. When we look at the next slide, we focus on one of the other things we really like to see, and that is more miles on the vehicles that are out there. And you see that dip some from 2012 to 14. We're starting a 2016 study. This study takes about 2 years to complete. So we see a drop of 7.2 in miles traveled. We're not bothered by that too much because you're going to see generationally people owning their first motorcycle, and you're going to see some sales that are probably more likely happening in urban areas, and that changes the vehicle miles traveled. As an industry, the next slide, we're still 25.4 billion miles traveled on motorcycles. That's another key point to legislators. We're not insignificant. We use a fair bit of fuel, and we pay, as you know, a lot in fuel taxes. We would expect better roads and more consideration of motorcycles from that investment we all make as we buy the fuel. The next slide talks about just the quick snapshot of motorcycle owner profile. Our average age, we were excited when that dropped to about 40. It's back up at 47 in 2014. We'll focus on women in just a bit, but 14% of our riders now, owners, are women. Excited about that. Household income is above U.S. average. 61% of our riders are married. We look at the next slide, and you're going to see the history since 2003 of female owners at 10% in 2003. 2009, 11, then 12, and now are 14. In 2003, that was 600,000 women riding. So we look ahead knowing that 14% is a nice number. The good news is our total rider count hasn't remained static. So we look at this next slide, and you think of that gain from 10% to 14. What's that really mean? Is it 900,000? No, it's 1.2 million. So if you think in terms of from 2013 or 2003 to 2014, we've doubled the women rider owners, and we're excited about that. This next slide, we look at household income, and maybe sadly in some ways, it's 51,939 average household income in the U.S. Of course, all of our riders are earning above. When I say all, the average is that motorcyclists as a group have a higher household income. And we know that sometimes we are considered a luxury, durable, discretionary purchase. And I like to say that the discretionary purchase is your first motorcycle. Any subsequent motorcycle or power sport product, for that matter, is a necessity. We need to think that way. We need to look at our current customers and go sell them the next one. So we've looked at household income. Let's look at age briefly. And this next slide shows you that only sport bikes are below the U.S. average age of 36.8. All others are scooter, dual, cruiser, traditional, and touring above the U.S. average age. When we look at generationally, this next slide, there's some interesting news here. You can look at what segments the different generations are focused on. And maybe not surprisingly, you can look at something that's kind of interesting, the bigger numbers for scooter that are Gen Y and are mature. And so that's pretty interesting. You see cruiser not as popular amongst Gen Y, but sport bikes are. And so when you look at this and you think of your market, you can think in terms of household income, you can think of median age, you can think of motorcycle type. You can now think of how do the different generations consume or acquire motorcycles. And the next slide looks at whether they buy new or used. And, you know, Gen Y, we used to think, oh, that's all the young folks. And they are relative to most of us. But there was a time when they mostly bought used bikes. And you think, why? Well, maybe more attractive price point. Maybe they didn't have to buy as much insurance because they weren't financing as much, and so on. And you look now that Gen Y, these are folks that have started a family. They're coming more into their earning years, and you're seeing that 57 times out of 100, they're buying a new bike instead of a used. That's more than flip-flop. That's a significant change when more than 60% used to be buying used bikes. And you see the same for the other generations. When we look at the shift over time in this next slide, we're going to first look at our Generation Y, or millennials is another term, and they're plus 3% more of the market now than boomers. Now, boomers, me and maybe a bunch of us on the call, you know, we've been kind of the sustaining generation of motorcycling for a long time, but you look at the growth of millennial, and we don't show it here, but what follows millennial are centennial, sometimes referred to as Gen Z. I often go with the letters just because they're shorter and easier. But Gen Y, millennial, are coming on, and they're coming on nicely. The next slide looks at Gen X. That's a smaller generation in total number. I should have noted that Gen Y and Boomer about the same count of in excess of 72 million Americans fall into both Gen Y and Boomer. Here's Gen X, considerably less in number and been relatively flat. You don't see the spike from them that you might have expected. When we look at the next slide, you see Boomers added in now. And during the tougher times, you go back to the economic downturn, we went from 48 in 2003% of the market to 36%. And you see in the tougher times, and the market's starting to recover, but slowly, some growth back to boomers. And the reality is, one of the brands did, I thought, a pretty nice marketing campaign of kind of all this uncertainty, all the craziness in the world and the economy and my retirement plans and all of that. Screw it, let's ride. and we saw boomers pick back up, and that was healthy and good for our industry. The last slide shows mature, and when one of my older gentleman friends said, you know, don't count us out. Well, we're not counting anyone out. We'd love to see more business from mature, but generationally, you know, things change. And so again, I hope when you're looking at some of this, you're thinking in terms of, you know, am I addressing this market? Do I get it? How is my market different than this? And, you know, am I adjusting to the market that is out there and seems to be evolving? And another way to look at that's owner ethnicity. This next slide, there's a lot more detail in this when you look at kind of by segment and everything else. But this is a slide you can look at and say, you know, what's my market look like compared to this? And frankly, what does motorcycling look like to the U.S. population? And I'll just tell you that we've doubled business of Asian owners in the past 6 years. We've increased on the Latino side. African American, I think roughly the U.S. population is about 13% or so, and we're low there. And so what MIC members are able to do is then look at, you know, what products, again, these are terribly generalized points, but if you think in terms of by ethnicity, by age, by generation, by my likelihood to buy new or used, by my income, by my, you know, miles traveled, what values am I going to get out of the product? These are all important things for us to know. Do we look like the market that we have or the market that we want to have? And should we make changes in our approach, in our communications, frankly, in our staffing, you know, to take advantage of a market that we see? Just a couple more slides quickly as we wrap up here. This next one, we go back to the 10.1 million motorcycles in use amongst 9.2 million owners. Here's a real key thing, including those 9.2 million owners, 30.7 million people operated a motorcycle in 2014. In my mind, that's 21.7 million prospects. These are people who rented a motorcycle, may have test ridden, done a demo ride, talked a friend out of a bike for a while. Again, I think a lot of this follows through for our other Powersport product as well, is our current owners and riders are some of our best advocates. If they're getting people excited about motorcycling, what are we doing through our current owner base to find their friends and the people they've maybe lent a motorcycle to? I don't recommend borrowing somebody else's bike to check it out. I recommend that the best first ride is in an MSF basic rider course. But at the same time, think of 21.7 million people who rode a motorcycle in 2014 but didn't own one. I'm excited about that kind of number. Let's move to the next slide, and I think we just have a couple more. The attitude that people have toward motorcycling. And so when we look at that in 1988, 89% of the family and friends of current owners. Now that's the closer people, and frankly it's maybe a lot of those 21 million folks, 89% were positive or neutral. And we click this slide again, and what we see is that we've grown to 94% positive or neutral in 2014. Don't have to tell you that when you go way back in the 80s and into the early 90s, we were lucky to see kind of a split amongst positive and neutral to negative and very negative. So this is another good thing for us. The last few slides, just some quick sales numbers. You're probably wondering how things have gone. Certainly you've experienced it. We're seeing improvement, but this isn't any kind of a hockey stick recovery. I've got motorcycle sales here through 14. You know, you've seen positive growth 2011 through 14, but not significant. We look at the ATV slide on the next slide, and we see, you know, the dramatic drop in 2010, and then again positive, but barely positive. I don't have ROV sales, but the drops we've seen in ATVs have been more than made up by ROVs, and of course the ROV price points are great, so we're excited about that. Last two slides and we wrap up. Year over year, 14 to 15, this year through October, we see 4.7% increase in new unit motorcycle sales. And the last slide, we see a year-to-date increase over 14 for ATVs at 0.9%. So again, relatively flat. That next slide shows the ATV business at 0.9. So that's what we have. I wish I could spend more time, but I think the final point I'd make is just, are we looking like the customers we have or those that we want to have? And hopefully you see some good market opportunities there. Thank you for your attention, and I wish you well on the balance of the call.
Perfect. Well, thank you very much, Tim, for taking the time on such a busy day that you have. Of course, next we have Noel Lais, VP of Operations at Spader Business Management.
Thanks, Liz, and thanks to Powersports Business Magazine and MB Financial for sponsoring the webinar today. So I wanted to share with you some of the numbers that we're seeing from the dealers. I picked out some of the slides from the market data book. And Liz, have you turned control over to me now?
Yes, you have it now.
All right, there we go. So the first slide and this is of course the most important, is how are the dealers doing? Are we making money or not making money? Are we making the money that we should? So sometimes, it's helpful, we get so caught up in the current year and even comparing to last year. I think it's helpful, particularly as the year winds up, to look at the trend, and so I'm so grateful to Powersports Business Magazine for publishing the 10-year trends, and so that's what I have on the profitability here, and the blue line is the profitability by year. As you can see, big decrease in 2009, and it's been growing since then. The orange or the yellow line, that in the middle, that's the trend line. So if we look at the trend line, we can see overall in the last 10 years, profitability has increased. It's upward trend, and that's positive. We're glad to see that. If you would draw a line from the 3.5% net profit over on the left, the 3.5, if you follow that line straight across, 3.5 is what we say is survival net profit. That's the net profit that we believe that a dealer needs to earn in order to be an ongoing business, to stay in business, to have the funds to invest in their business, to continue to operate. And so if you look at the last 10 years, we can see that the 3.4 is very close to that, 3.6, 3.7, 4.5, the nice profit there in 2012, down to 3.4, and then 4.5 again in 2014. So 6 of the last 10 years have been at survival net or better, and so that's a positive thing, and a very nice growth in 2014. To dig into the details a little bit, I wanted to share with you the new, so this is new power sports sales. So this would be motorcycles, ATVs, snowmobiles, all power sports together. And again, if we're looking at the orange line for the last 10 years, we can see that new sales has been on the increase. The dip during the economic downturn, but they rebounded and grown again significantly in 2014. So that's a positive, very positive trend. But on the other hand, we're all about profitability. Look what's happened to the new power sports margins from back in 2005 at a little over 12%. to 2014, just under 12. So the margins, and I think I've run into this with our dealers in our 20 groups and our consulting, many of those dealers are experiencing increasing pressures on new margins in particular. And part of that is the price of the units, and so we're seeing an overall decrease headed downward in the margins on new units. Let's take a look at our used segment, and so this is used Powersports sales, and again you see the trend line in the middle, the yellow trend line. In the last 10 years, the used market has grown from a little over 700,000 up to almost $1.2 million in used sales in 2014. So again, headed in the positive direction on our unit sales. If we look at the margins on our used units, we see a little bit different trend here than we saw on the new margins. And in 2005, the average used margin was about 15.5%, and in the 2014, the used margin was almost at 18%. In fact, 2012 we surpassed 18%. And so in our 20 groups and the Powersports dealers that we work with, that's what we're seeing is as margins are being squeezed on the new side, our dealers are finding ways to increase their margin on their used units. So again, if you look at your business over the last 10 years, are you seeing that trend of increased margins on used units? The average dealer is making more margin on used units than they were 10 years ago. My next slide, and there we go. So as we look at our sales and our margins, the other key piece to managing a successful dealership is the inventories that we're stocking. So as you would expect with new sales increasing, you would expect that the inventory levels on new units would increase also, and that's what we see with the blue trend line. We're seeing the average inventory on new units that dealers are carrying has increased over the last 10 years. And if we look at the used, again we see that has increased, although at a higher rate as used units have grown a larger percentage of the new have. We see that the used inventories that dealers are stocking has also increased. But how much inventory growth is good, or how much is too much? Because one of the things that we find that affects profitability of our dealers more than anything is the proper inventory levels, stocking the proper inventory levels on units. So the way to measure that, there's a couple of metrics that we use. One is the inventory turnover, and so this is a graph of the inventory turnover for the last 10 years, and you can see the dip again during the economic downturn. Got down to in 2009 less than a 2-turn, 1.68 inventory turnover, and then that number gradually grew, and in 2013 took a big jump to the average. This is new and used together. The average turnover on new and used Powersports was 3.5, and then in 2014 we can see that it dipped below that trend line down to 2.3. And so what that says to me is that dealers, as sales were increasing, dealers were stocking up on inventory, and in 2014 we saw the increase in stocking actually was greater than what was needed or warranted for the increase in sales. Another metric that we use to measure this is on my next slide, it's called the return on inventory investment. And so we use the factors of the sales that are made, and the gross margin percent, and the inventory stocking levels to arrive at a return on invested inventory. And again, the good news, if we look at the green trend line, is over the last 10 years, there's been a slight increase from below 30% return on inventory to a 33% return on invested inventory. It did grow a little bit from 2013 to 2014. So it's headed in the upward trend. I don't have this on the slide, but I was interested to look at our most profitable dealers, what their return on invested inventory was. And what I can tell you is that the 20% most profitable dealers that reported to us, they had a return on invested inventory of 46.9%. And we're believing in this area that a 40%, just as we talk about survival net profit at 3.5, we're believing that a 40% return on invested inventory is a target. And as I said, the most profitable dealers turned in a 46.9% return on invested inventory. So that was a summary of the last 10 years. In the market data book, we had presented the July numbers, and because that was the latest numbers that we had at that time. I thought today I wanted to just take a quick peek at the most recent numbers, and that would be the October 2015 numbers. And so I pulled up the online trends watch that is available to all dealers at no charge on the Spader portal, and we graph some key indicators. And so on the blue bars, we're looking at unit inventory, company sales, and net profit, the % change from last year. And so we look at the inventory is up 8.7%. Company sales are up 6.2%, so inventory is up a little bit higher, and that's that turnover, that downward trend in turnover that we saw. And but the most important one is net profit is down slightly. So that's not indicating that that's a loss. The dealers are still profitable, but they're 0.5% less profitable this year than they were a year ago in October. And we look at why, and that the green bars explain that. Our company gross margin is down just slightly. Remember that pressure on new margins, not quite offset by the increase in used margins. There we see our net profit % of sales. And look at personnel, variable, and fixed. The average dealer is spending more in each of those expense categories this year than they were a year ago. So margins down slightly. Even though sales are up, margins down slightly and spending is up. So that yields slightly less net profit. We want to take a look at the actual numbers. I've got that on the next slide. And I broke this down. There's a lot of numbers on here. You can pick your category and where you are, but I broke it down because we're seeing different results depending on the sales volume that the dealers are in. So the top section is the dealers under $6 million worth of sales, and you can see their sales are up from 3.9 to 4.8. Company margin is flat. Profit in terms of dollars is up slightly to $116,000, but the net % of sales is down slightly. And as I mentioned earlier on inventory turnover, that group of dealers is experiencing a lower inventory turnover. And the dealers that are at $6 to $10 million, we can see again sales are up. Company margin is down about almost 1%, and as a result, their net profit is down. So this is October 2014 compared to October 2015, and their net % of sales is down significantly, and turnover is flat. So the dealers that middle group are not having as good a year in 2015 as they had in 2014. And then the last group, dealers over $10 million, revenue up not as much as a percentage-wise as the others, margin up slightly, profitability up in terms of dollars, and in net profit percent of sales. The best of all three groups is just down slightly as turnover is down slightly. So that's a snapshot of the financials that we're seeing from our Powersports dealers. Liz.
Perfect. Thank you very much, Noel. Our next speaker is Robert Brandt. He works with CDK Global Recreation. So we are going to get him hooked up here right now. All right, Robert, you should be able to take it away.
Okay. Thank you, Liz, and thank you, Powersports Business, as well as MB Financial for your sponsorship this year. So wanted to go ahead and take a look at just industry snapshot broken down by department. And a little background here for everyone that may or may not know. These numbers are pulled from approximately 1,900 dealers, both in the U.S. and Canada. And these are pulled from transactions that transpire through their dealer management software, their Lightspeed dealer management software. And so if we take a look first off at unit gross profit, unit gross margins, looking at it on a 5-year as well as a year-over-year change, we found that, typically or generally speaking, we've been flat. And there has been a slight, up or down, a fraction of a point or not whatnot. But generally speaking, everybody is maintaining their margins. And looking at the 15 numbers up through Q2, we were finding that for the metric lines, they were holding approximately a 9% gross margin. And the V-twin lines, we were seeing about a 15% gross margin. And then our dealers in Canada were holding approximately or just under a 12% gross margin on their unit sales. So we took a look then as well at the service end. And so if we take a look at the average revenue per repair order being generated, we found that over the last 5 years, we have seen a vast increase in service revenue. Now, that could be attributed to a number of different factors, whether that be the increase in sales with the UTVs or the adventure bikes or others, with additional accessories or other features being added with those. But that's an interesting figure to be able to take a look at and to see that we do have that upward trend in revenue generation through the service department. Year over year, based on last year in the metric line, there was a $6.10 average increase. On the V-twin side, we saw a $26 increase, whereas in Canada, we actually saw a slight decrease on year over year improvement. Generally speaking, the averages that we see on a typical ticket generated within the service departments for the metric lines, generally speaking, those numbers have come in around $360, $370 per ticket on average, where we see in the V-twin market closer to $500 per ticket type average, as well as in Canada being just over $500. And so that is interesting and something to take note of. There may be some opportunity there that some upselling of those accessories and whatnot, where the V-twin market is taking advantage of some of those add-ons. The metric lines could possibly look at improving that as well. Now, one other thing to note is the parts to labor ratio that we are seeing in the V-twin lines. We see closer to, for every dollar of labor, $1.30 in parts are being added on that, whereas the metric lines are typically showing about a 1-to-1 ratio on that. Moving on now to our parts department and accessories. Looking at the average part counter ticket, we have seen increases over, year over year, as well as over the last 5 years. both in the metric and the V-twin lines. So you'll see that on average, we are seeing an $11 change over the 5-year period, with approximately a $1 change over the last year on the metric, and then V-twin, we're seeing the $7 change over the last 5 years, as well as almost a $2 increase on the over-the-counter tickets. What we've seen on average, ticket size-wise, in the metric lines, we're seeing approximately a $93 per ticket transaction value, as well as in the V-twin side, we're seeing approximately $90. And so there's, some good increases there with some upselling within the parts and accessory departments that we're seeing within the industry. Now, moving on to take a little deeper dive into the service department, we have also taken a look at this broken down by territory. And so based on your geographic locations, we've broken that out, West, Midwest, Eastern, and whatnot. You'll see broken as well down by metric and V-twin lines. And we are seeing that, the state of California is, on the metric lines, has been the top performer. And they have actually increased on a average service repair order revenue perspective. They've increased that approximately $12 year over year. Now, if we look at the bottom side, we're also seeing in the Northeast that that's actually had a slight decrease, but a decrease of only a couple dollars. And so you can see that there may be some various factors based around the geographic locations that you may be operating in. On the V-twin side, we are seeing the West in general. We're seeing that they've actually increased their per ticket average by $56, as well as in the Northeast, they've increased theirs by $36. And so there may be some different opportunities, it appears, in the Northeast than what we might see in the West, based on, whether it be the demographics or other factors that are happening out there. So other areas of interest, as we looked at a few other options in our studies, looking at the data, we've actually been finding that on all of these transactions that are transpiring in the dealer's operations, we are finding that approximately 35% of the dealers are collecting email addresses on those transactions. So as you might see or understand, that could possibly offer some limitations, or if you look at it on the flip side, some opportunity to be able to improve in the upcoming season. And so as you do improve the collection of that data, whether it be email addresses, cell phones, or otherwise, that will provide some additional marketing opportunities that may or may not be being leveraged at this time. With that, obviously, customer or store traffic as well as customer satisfaction can be improved. And so this is something that we hope to be able to track and be able to see year over year in the upcoming season, how those numbers change. And it'd be great, just another little tidbit or another little piece of information that we found interesting in our studies. So that is all that I have at this point. And if you have any questions, please feel free to contact us. And Liz, will turn the time back over to you.
Perfect. Thank you, Robert. All right. Our next speaker and last speaker is Jim Woodruff, who is the COO at National Powersport Auctions. He's going to share some pre-owned data with us.
Great. Thank you very much, Liz. Pleasure to be here with everybody, and thanks to you and Dave at Powersports Business, of course, MB Financial. We've got some great information here today. I've learned a lot myself listening to the folks that have gone already, and some really interesting insights. And I think some of what I'm going to share here today will actually tie into that. NPA, for those that aren't familiar with us, we are the wholesale channel for Powersport. So basically we liquidate all the vehicles for the banks, some OEMs, dealer trade-ins, excess inventory. And with that, we get a real-time perspective from our auctions, both live and online, across the nation. And that's the basis of what we're talking about here today. The database that we typically work with goes back about 15 years now. So we've got nearly 1 million transactions in there and gives us a good insight into what happens over time as well. We also make that available, the information that we capture available not only through webinars and things like that like we're doing today, but also in real time through a value guide, monthly market reports, and other information. So I've consolidated some of this, and some of these are slides taken from the data book. I've updated some of them to be through the end of November, so we have a pretty accurate year-to-date snapshot. And then I've also included some commentary on what we think are the drivers or the implications of what we're seeing. Overall, in 2015, compared to 2014, we actually saw a decline in average wholesale price. Looking at the data, that could be either because of a change in demand or it could be a change in what's being sold. And that's primarily a change in what's being sold. I'm going to talk about that a little bit more here in just a second. But the product mix has shifted a little bit to slightly older units. If we look at a comparable unit, such as clean units, which we base upon our condition rating score that we apply, pricing is actually stable or up. So that kind of reinforces the idea that the types of vehicles coming through the auction lanes are a little bit different, not substantially, but a little bit older and a little bit higher mileage, et cetera. At the same time, auction volume's down about 3% overall from 2014. These numbers do not include the factory units that we sell for OEMs, so it really is just the repossessed and consigned units from our dealers. So it's a pretty accurate snapshot of what's happening in a wholesale market. And the main drivers behind the volume change are really twofold. The economy's doing pretty well. So default rates are low. That's driving down to a certain extent the repossession volume. Cure rates are all-time high, so if something does go delinquent, consumers are tending to pay them off or at least catch up on their bills rather than someone coming and taking that vehicle away. So that's good. It keeps riders in their vehicles. And then on the factory side, we are seeing fairly stable volumes there. So there's no warning signs or red flags and what we're seeing at the OEM level. Now, on the right, this is a chart that comes from the MIC, or the data comes from it. We've turned it into a visual. And I don't recall exactly what period of 15 this covers, but fundamentally, the ratio of registrations at the state level for on-road motorcycles is close to 3 to 1. And so that's interesting. In years past, it was a little bit closer to about 1.5 to 1 for on-road, and it's been elevated over the last few years. And one of the main reasons for that is that as the new industry took a hit from the economic crisis, the pre-owned industry didn't take as big of a hit, and the new sales are, still kind of slowly growing back out of that, keeping that ratio high. But that presents a tremendous amount of opportunity, and we're actually big believers that not enough pre-owned vehicles go through dealers' doors. Only about a third or less of the pre-owned transactions in the United States actually make their way through a dealer. So there's still plenty of opportunity. Now, we would think, looking at the data, that the declines in price and volume wouldn't jive necessarily with what's happening in pre-owned. The fact of the matter is that it actually does. As the Spader data showed, there are actually increases in volumes and nice healthy margins there. New's doing well as well, if you go back to some of the data that Tim Buche shared. So why aren't prices and volumes going up at auction? Well, again, product mix is the number one driver for the average price. The things that we're seeing, repossessed vehicles tend to be a little bit older now. And dealers are holding on to the newer inventory, and when they take in a trade, they're tending to send the older stuff to auction. So again, it's not drastically older, but just enough to move the needle here. So the actual, in reality then, the healthy economy and improvements at the retail level in dealerships are actually having a reverse effect to a very slight degree in the auctions. So on the average model age is about 6.3 years overall, up from about 5.5 years in 2014. So if we take a look in a little bit more detail, folks have seen these charts before. These are our seasonality curves for average sale price or average wholesale price at auction. I'll define what's here for just a moment. Average wholesale price is what we actually sold a unit for. The percentage is the percentage as a function of the average for that year. So if the price is the same throughout the entire year, it'd be a flat line 100%. And then the lines are the 5-year average, what we saw in 2014, and then so far this year in 2015 in the red. And of course, across the bottom are the months of the year. So what we're seeing, and I've included kind of all the main categories on one slide here, so it's easy to see the differences between them. But in general, average pricing is following normal seasonal trends. Now, some categories a little bit noisier than others. Domestic cruisers tend to be a little bit better behaved throughout a year, whereas something like ATVs, for example, tend to be a little bit more bouncy from month to month. But in general, this year is similar to what we would typically expect to see. Now, the red line's lower. Well, why is that? Well, it's partly because 2015's not done yet, so we don't know what the average price of the year is, so we use 2014's. And what that indicates then is that average prices this year are lower. So we know that from what I just covered, but it varies by segment. They're down more for metric cruisers than they are for domestic cruisers, and for ATVs and actually other off-road products, it's actually trending up over what we saw in 2014 through the auction lanes. Again, that's primarily product mix. In the case of ATVs, the average price of those units has tended to go up at MSRP as well, so we're seeing a richer mix, so to speak, of vehicles coming through the lanes, dragging that up at the same time. Now, there are some variations. August of this year, there was a bit of a dip, whereas in other years, it may occur at a different time. In 2014, for sport bikes, for example, the dip occurred in July. That tends to be roughly coincident with when rebates are announced or heavily promoted by the OEMs, and of course, that has a corresponding impact on what we see coming through the auction lanes. So, moving on to the next slide here. This is an illustration of the effect that I spoke about earlier with shifts in the age of units. So I picked out one category, metric cruisers, because that had the biggest impact in year-to-year price changes. And we can see over time that, yes, in fact, things have gotten older, which is the black line, and that the number of miles on the unit, which is the dashed red line, has grown as well. And they track each other as you would expect. People, the more they have the bike, the more they ride it. One of the interesting numbers that comes out of this, if you actually do the math on the red and black lines, you see that the average miles per year on a metric cruiser is right about 2,200 miles per year. And that really hasn't changed much from 2011 all the way through to 2015, the 5-year period that we looked at. So it's fairly consistent. And that's the main reason why the value in the auction lanes for metric cruisers has gone down year over year, is that last year's average age for a metric cruiser was a little over 7 years. Now it's a little over 8 years. So that 1-year difference moves the needle. Overall, one of the things that's interesting is that, I didn't include it on the slide, but the average condition of units coming through the lanes is actually fairly stable. So even though they've gotten older and the mileage has gone up on the average, the quality of the vehicle that are coming through the lanes are about the same. They're actually, in general, good, decent units. So what are we seeing right now? Right? So what are some of the trends that are occurring that the MPA can see? First, as I mentioned, wholesale pricing is behaving fairly normally. It's, this typical season. We're actually right now in the transition from fall pricing to spring pricing, so things have kind of stabilized a little bit. And another thing that's interesting is that we're getting probably more requests this year than the last several years combined from new lenders looking at entering the power sports space or expanding their presence. The economy's strong, default rates are low. Yeah, financing regulation is up, makes business a little bit more difficult, but there's a lot of opportunity in power sports. Several months ago, Capital One announced that they would be exiting the power sports space due to internal reasons. So that's a good thing. A number of folks are looking at filling in the space left by Capital One, or maybe acquiring that portfolio, et cetera. And that's encouraging to me, because we're all not going to be left in the lurch when a large player like that makes a business change. Also, for the first time ever, the Auto Finance Conference for auto lending included a day dedicated to power sports. So we were there, a number of other folks were there, and that's good. So the awareness and the interest in the space is growing, and that's going to make it easier for us all to sell the new and used vehicles and other things that we have. The data that was shared earlier reinforces the idea that dealers like pre-owned, and OEMs like it or hate it. It's kind of one or the other, and it really depends upon their perspective. Do used units help or hurt new sales? We like to think that if done properly, they go hand in hand. There's a price point buyer that for a typical type of brand that a used unit can be a perfect candidate for, and over time they'll graduate to the newer unit. There's also a lot of exciting new product coming into the market, and so particularly for the younger generations, based upon Tim Buche's data, those can be very attractive on the new side to those types of buyers. We also are seeing continued adoption of technology, certainly at a consumer level. I don't know who has kids. I have 3 of my own. Getting them separated from their phone is next to impossible, but that's good. It's a great tool, and we're seeing the same thing happen in the dealership level, and that information being used at the dealership level to make better data-driven decisions. NPA Value Guide usage, for example, this year, we're at about 500,000 views. That's almost as many views as there were pre-owned vehicles sold through the dealer channel this year. And of course, some dealer applications that we see coming that are pretty interesting. So as we take a look at these things and try to think about, well, what do we see happening in 2016? The data is interesting, but is there anything that can help us see what might be coming? So these are our beliefs. Like a weather forecaster, we'll find out whether or not we were on the right track. But we believe that retail sales will remain solid and will likely be up for both new and used unit sales in 2016. We also believe that the new lenders that are looking at the space or looking to expand will do so. GE has announced both the sale of their commercial finance division as well as a spinoff of Synchrony. Those will be finalized in 2016. In fact, I think Synchrony may already be finalized. The name change occurred, and I think we're still waiting on that. There will be a replacement of some kind for the Capital One paper being written, and Sheffield and other folks that we're looking at will do for additional work in the pre-owned space. A really healthy change, which could help with some of the operating expense comments that we saw earlier in the Spader data, is that dealers will continue to be more data-driven. They'll be looking more closely at their processes, where they're spending their time, where they're spending their money. And there's a number of tools that are either in the market today or are coming to the market that we believe will make a difference in 2016. And then lastly, at the wholesale level, we believe that pricing and volumes will remain fairly stable. Things are going to get crazy expensive. I don't think that's going to happen. I don't think they're going to get crazy inexpensive, that the market's going to tank or anything like that. I think they'll be fairly stable, and we will continue to see the types of trends that we would see in a given year, with maybe a slight rise because of either a equal or slightly younger product mix, as well as the typical rise in MSRP that occurs every year. We also believe that the product mix will in terms of the allocation of domestic cruiser product versus metric and off-road, that should stay fairly reliable in 2016 as well. So with that, Liz, I think we're ending right about on time here. I appreciate everybody's time, and everybody who's listening. Certainly if there's any questions or additional information that folks would like, we're always happy to help.
Perfect. Thank you, Jim. It looks like we don't have a lot of time for questions. Actually, we pretty much try to get this done right at an hour just so people can get back to business. I know we know you're all busy at this time of year. If you'd like to share this webinar with your colleagues, we are sending the slide deck to everyone who attended today. We're also recording it. We'll have the full presentation available to you shortly. On behalf of PSB, MB Financial, and all of our speakers, we're really glad you could join us today. Thank you, and have a great afternoon.